Welcome to your U.S. market recap for Monday, February 9th, 2026. This is Jim, CEO of the Alpha Group. Stocks started the week cautiously higher as investors balanced last week's volatility with optimism around earnings and global markets, while bracing for delayed U.S. inflation and jobs data later this week. The tone today was constructive on the surface, but underneath, markets are still pricing uncertainty around rates, growth, and risk appetite. In U.S. markets today, stocks drifted modestly higher. The S&P 500 gained roughly 0.5%. The Nasdaq rose close to 1%, while the Dow was slightly positive, reflecting selective buying rather than broad conviction. Tech led the advance, particularly semiconductor and AI infrastructure names, as investors rotated back into hardware after recent software weakness. Nvidia and other chip makers helped support the Nasdaq, while broader market participation remained mixed. Defensive sectors held steady, financials were flat, and consumer stocks showed uneven performance. Beneath the indexes, market breadth was narrow, suggesting traders are still choosing spots rather than embracing full risk-on exposure. Overseas, strong global cues helped sentiment early in the day, as Japan's Nikkei surged to record highs following political developments, lifting global equity confidence and spilling into U.S. trading hours. In alternative assets, gold and silver rebounded sharply, signaling continued safe haven demand despite equity gains. Bitcoin and major cryptocurrencies stabilized after last week's pullback, hovering near key technical levels as traders assessed whether recent selling pressure has run its course. The primary force shaping markets right now is anticipation. Investors are positioned ahead of delayed U.S. economic data, including January's jobs report and inflation numbers, expected later this week. These reports are critical for expectations around Federal Reserve policy, especially with uncertainty growing over whether rates stay higher for longer or whether easing comes sooner than expected. Bond markets reflected that tension today. Treasury yields ticked higher, pressured in part by overseas developments and concerns about foreign demand for U.S. debt. That yield movement has limited upside in equities and is keeping volatility elevated, especially in rate-sensitive sectors. On the commodity front, oil prices edged lower, helped by easing geopolitical risk and diplomatic progress that reduced near-term supply fears. Energy stocks moved in response, but the broader market impact was muted. Meanwhile, corporate earnings remain a key driver this week, with major U.S. companies across tech, consumer, and industrial sectors reporting. So far, markets are reacting less to headline beats and more to forward guidance and margin commentary, especially around spending and demand strength. At the stock level, today's moves highlighted ongoing rotation. In healthcare, Hims & Hers sold off sharply on regulatory concerns, while Novo Nordisk gained, showing how policy headlines can quickly reprice expectations. Within technology, AI remains the dominant theme, but not all tech is moving together. Infrastructure and chip suppliers are outperforming, while parts of software continue to lag as investors question valuation and future profitability. In crypto, Bitcoin, Ethereum, and XRP remained under pressure, though losses moderated. Bitcoin briefly dipped below key levels before stabilizing, and analysts are split on whether this represents consolidation or a pause before another move lower. Commodities told a different story, with precious metals strength suggesting some investors are still hedging against macro risk and inflation uncertainty. Looking ahead, markets are laser-focused on what comes next. The biggest catalysts are the upcoming U.S. CPI and jobs data, which will heavily influence interest rate expectations and risk sentiment. Earnings will continue to drive stock-specific volatility, particularly as companies comment on demand trends and costs. Traders are also watching global bond markets, oil prices, and crypto flows for confirmation of broader risk direction. That's your U.S. market recap for February 9th, 2026. Stocks are holding up, but conviction remains fragile as investors wait for critical economic data and clearer signals from earnings. Stay focused on inflation, rates, and sector leadership as this pivotal week unfolds. If you would like to stay up to date on all of the financial news daily, please like and subscribe. We will see you tomorrow.